Welcome to Small Business 21st Century. And this session of the Wealth Zone University, welcome back. Today we've got an exceptional, and I do mean exceptional session for you, because we've got two of the brightest minds in the banking industry to sit with us and talk about us. I talk to you in real time about how you need to be prepared to help them to help you. Now, we all understand that capital is vital for our business, and these two wonderful people, who I'll introduce you to in a second, are the root to making sure that you get that capital. So let's get started, okay? Hi, Tiana Wells. How are you?
I'm doing well, Don.
Good, good.
How are you?
And you're with Fulton Bank.
Yes.
Okay, I'm going to ask you to tell us all about you in a second. And then my buddy, Chris Mills.
Good morning, good morning.
How are you?
I'm well.
Good. Harvest Small Business Finance?
Yes.
All right,
yes.
I got it right. So I got points with both of them right now, okay? Tiana, please tell us who Tiana is and about Fulton Bank and what you do. Take your time.
Okay. My name is Tiana Wells Lawson. I'm a vice president in business banking with the Fulton Bank in Maryland. I've been in banking for a little over 20 years. I'm not going to say the exact years because I don't want you all knowing my age. So I've been in banking for over 20 years, and I've enjoyed working here with Fulton Bank. Fulton Bank is a $30 billion bank, and it's headquartered in Lancaster, Pennsylvania. We have a footprint in 5 states: DC, Maryland, Virginia, Pennsylvania, and Delaware. And we really are looking at and focusing on providing access to capital, and our focus right now is the urban markets.
Okay.
So right now the huge focus is Philadelphia, Baltimore, and DC for the urban markets.
And so when you say urban markets, are those companies that are located physically inside of some geographic area?
Yes, physically located in Baltimore. We want to make that our growth market, where we're going to provide access to capital. DC, businesses in DC, and also businesses in Philadelphia, Pennsylvania. And I'm a part of the new business banking segment. And in business banking, we're focusing on clients that have revenues of $1 million to $5 million, because we've just felt that in the past, those smaller businesses have been underserved. So we want to make sure that we're going to provide access to capital to those smaller businesses.
Okay, we're going to talk about that specifically in a minute. After we meet my friend Chris Mills. Chris, tell us all about you and about your company.
So my name is Christopher Mills. I've been in the banking field for 28 years, and primarily as a senior commercial lender, commercial real estate, and vice president at a variety of large banking institutions. Today I work for Harvest Small Business Finance, and we're a nationwide commercial real estate lender. And so we finance owner-user commercial real estate projects all over the U.S. I sit here in Maryland, just south of Baltimore, but really cover the greater Washington area. So we're looking at small business owners, entrepreneurs that are looking to either buy their commercial real estate, buy the property, expand, or refinance the property. And so we support the SBA programs as a non-bank lender, so we're a PLP approved provider of those programs, as well as conventional finance. So we tend to partner with banks that sometimes may be concerned about the risks of some of these transactions, but we're not a bank.
Okay.
And so we are looking to support exclusively the real estate transaction that most owner-occupied businesses are looking at today when it comes to investing in the expansion of their business.
Okay, so I've got a specific question for you.
Yes, sir.
Non-bank lending, what does that mean? You got your own money in your pocket that you give to me? What does that mean?
Good question. So Harvest is certified with the SBA to underwrite and approve our own loans. And so we have a license to do that. And so we are not a banking institution in the sense that we're not lending depositors money.
Okay.
Right. That's the biggest difference. Okay. And what that affords us is flexibility with regard to supporting the programs, because we're able to do things sometimes very quick. Because our team is focused just on the real estate transaction.
Gotcha. Okay.
So when I was at the bank level, it was the loans in addition to depository accounts and all the traditional services you see at the bank. Today, I'm able to help my clients primarily just focus on the financing side of it.
Good. Okay, thank you.
Yeah.
Now, Tiana, Fulton Bank has an affinity program. Tell us
Yes.
about that.
Okay, so our Fulton Bank Diversity Affinity Banking Program.
Okay, Diversity Affinity Banking Program.
Yes, so it has been in force and established about 2 years ago.
Okay.
And what we wanted to do with this program is provide access to capital to minority-owned businesses, female-owned businesses, the LGBTQ community, and veteran-owned businesses. And so we want to do that because the markets that we're going in, that we're really after right now, are the urban markets. And so we want to make sure that we have different products and services available for those demographics.
Okay.
So what we're doing is we have lower interest rates. We have technical assistance that we can provide to these affinity groups and demographics. And it's just a really great program.
Okay. And so that's part of the urban direct market that Fulton has?
Yes, but we're going to offer it to everyone who's eligible, who
okay.
meets those demographics. But we wanted to make sure that since we're growing the urban market, that we have the products and services available to help those clients grow.
Okay. And so there are two focuses then. One's the urban market, and the other is the diverse affinity banking program. Okay, thank you. All right. So we've got a lot of stuff going on with both of these companies. So let me tell you, I work very closely with both of these professionals, and I met them quite a while ago, and the thing that gravitated me towards them is that they're proficient, professional, they talk English to you about what the banking's about, and they become your banking advocate. So when you work with them, they are interested in making sure that you become bankable. And so one of the things that we've been talking about is people establishing a relationship with the two of you before they need the money, not after they need the money. Could you tell us how that works with you and Fulton Bank?
Yes, it's very important for the client to have a relationship with the banker before they need the money, because as your banker, I'm going to be able to provide you with advice before you actually go to the bank to ask for the money. I'm going to be able to understand your goals and your needs and help you get that financial package together before we send it to underwriting, before we send it to a credit underwriter. And also, we just want to make sure that you're asking for money before you need it. That's very important.
Okay. Chris, same question.
Yeah.
Relationships before they need the money.
Yeah.
How valuable are they, and what do you recommend in terms of making those relationships with you?
Yeah, I find that sometimes clients will wait and say, well, I'll cross that bridge when I come to it. And to me, that's a mistake. And so a lot of times it's important for us to talk in advance of your lending need, because I can explain to you the criteria for an approval, right? The goals are here, yes, not just to apply. And so if I can walk you through the process in advance of your need, one, it's a less stressful scenario when you're ready to go, right? Not only that, when you're ready to apply, you know exactly what we need. Not only that, what we're going to be looking at. So I can walk you through it, A to Z, prior to you actually, coming to me for a loan. So sometimes clients will come and they're early. They've got good intentions, they want to talk about it, and that's great.
Yes.
I'd rather be on that part of the equation, because we can plan better. And so to me, it's imperative that you interview your bank or your banker to make sure that, one, they understand your industry, one, they have other clients that maybe are in a similar scenario that you're in, two, you want to make sure that the banker's experienced. And so you're not going to know any of that if you wait until the need is right there upon you. Sometimes you're with a bank and you don't know that, for example, they've soured on your industry. They're not lending to your industry anymore. How would you know that if you're waiting till the very last minute to come to them for a line of credit, or in the case for me, to finance your real estate project, et cetera?
And so the thing that I like about these two people, and we've worked together for a long time, is that they take a company, and even if they're not ready, they don't say, well, I can't help you. They usher the company along and bring them and make them bankable. And believe me, I've been in that situation where I walked into a bank early, was not bankable, and the banker brought me to be bankable. And I know that you've done that for several of my clients, both on the for-profit and nonprofit side. What does a company have to do to get prepared to be bankable?
Well, number one, they want to make sure that they have their financials up to date,
Okay.
and that their credit is strong. You really don't want to come to a bank and you don't know where your personal credit is and your business credit is. Understanding those two things are very important, and then also being able to just provide an explanation of what your company is, what you do, why should you bank with us, why should we provide you with access to capital. Really just being able to tell the story about who you are and why you deserve to get a loan with the bank.
So a company should be knowledgeable about their industry,
Yes.
knowledgeable about their company and company inside of that industry.
Yes.
Obviously, they should know their financials.
Yes, they should know
which
their
I find a
financials.
big problem. I call it own your financials. And if your accountant isn't making sure that you own your financials, then you need to think about changing your accountants, okay? But that's extremely important for our folks to know that before you need the money, that's when you establish the relationship. Chris, I'm going to ask you in a second, but we're going to take a break in a minute because we want you to know that this is your show. This is all about you. And in the next segment, we're going to be talking directly to you. So we want you to be prepared to listen. So grab a cup of coffee, pull up to the screen, write your questions down, and let's get prepared for the next session, okay? We'll be right back. The objective of the Wealth Zone University is to change your mind about money, to change your financial future. Hi, I'm your host, Don Maraney. In the Wealth Zone University sessions, my guests and I talk about a wide variety of business, financial, and other worldly topics. We are seeking to both educate and entertain you. We emphasize that the information and discussions are my opinion, perspectives, and ideas, and those of our guests. We in no way intend to deliver or provide financial, tax, or business advice. You should consult with your tax, accounting, financial, insurance, and legal advisors regarding the impact, application, or pertinence of any topic or opinion that we share on the Wealth Zone University. Welcome back to the second session of the Wealth Zone University. Our first part was dynamic, and so we're going to jump right back into it and talk to Chris. Chris.
Yes, sir.
We were talking about relationships before they need it and how you can help them.
Yeah.
Coming to Harvest, how does that work with you?
So I literally, depending on the client's need, we'll lay out for them the information we need to take a look at to assess their ability to purchase the property. And that typically is tax returns, depending on the timeline, usually at a minimum of 3 years. Interim financials or more recent financials, they don't have to be the finished tax returns. Some clients will use their QuickBooks statements for, especially this time of year where taxes are still being determined for the year. And then we look at their personal information as well. So it is a collective package. I'd probably say about 5 or 6 core items that are pretty standard. So we're looking at the individual behind the company as well as the overall operating company to determine the viability of them buying the building. Sometimes it's really simple. A client's been leasing a space, now they're buying the space they're leasing. We consider that a rent replacement scenario.
Yeah, that's
and so we're literally looking at what you've paid in rent the last couple of years, plus how profitable has your company been the last couple of years to get a feel for whether you can service the loan.
Okay.
And so depending on the program, a borrower can put down as low as 10% in some scenarios, sometimes even 5%. It's one of the benefits of working with a non-bank lender is that we've got some pretty aggressive programs with regard to the equity requirements that a borrower would have to face. Most banks, I won't speak for Fulton, but are lending conventionally at an 80% loan to value. We can lend as high as 90 or 95% depending on the scenario.
Okay.
So
we're going to talk about that specifically because those are things that we definitely want to hear.
Certainly.
But so I'm a company.
yes, sir.
And I've got financials, hopefully.
Yeah.
At least financials.
Yeah.
Do I walk in the bank with my financials and say, hello, Tiana, I want some money? Or do I first make a relationship with you and then we go into what we need?
It would be ideal if you make a relationship with me and then go into what we would need from you to get the loan.
Right. That way you can better understand who I am and
Yeah,
what my
who you-
company
yeah, who
does
you are.
before you start getting into the analysis kind of situation.
Absolutely, yes, and just to understand your goals as well.
Okay. And Chris, since we're talking about commercial real estate,
Yes, sir.
do I do the same thing? Do I come in and meet you first, or do I need to bring something to show you that I have commercial real estate or aspirations for commercial real estate?
I think it depends on the scenario.
Okay.
Sometimes clients know that they want to take on the investment in the coming year, and so now they're just kind of looking and exploring, what their lending options are. And so we can talk in advance of financial statements about the different parameters, different programs that are available to them. And then sometimes the client's ready to go. They're coming to you with a letter of intent. They've already found a property, and now they just want to see, hey, do I qualify? And if so, what does that look like? So in that scenario, I'm actually looking at the financials, making an assessment, and I can tend to typically give them a proposal within a 48-hour period as to what the terms would look like.
Okay.
And so, it's preliminary, but it allows them to go out and make decisions, right?
Now, do you both give term sheets?
Yes.
Okay.
Yes, we
All
do.
right. And explain term sheets for me, Tiana, please.
Yeah, so basically with the term sheet, we're going to identify what type of loan, the loan size, what the interest rate is, and how much you're going to put down, what that requirement is going to be, and just what some high-level fees could be on the term sheet.
And so that allows me to know what I'm getting into, essentially. And
Exactly.
is it any different on the commercial real estate side?
No, it's exactly the same.
Same.
So we
Okay.
lay out preliminary terms just based on the information we have at hand. So we haven't dotted every I and crossed every T, but you're giving us enough information to say, hey, we're comfortable lending to you based on what you provided at this level.
Okay.
And so it allows most borrowers to feel comfortable, one, that they can go back to their agent they're working with and say, hey, the bank's interested, here's what the terms look like, and then I'll literally provide conditional information that I need to solidify that into a formal commitment letter. And so I may say, hey, your taxes aren't done yet, you give me your internal numbers for 2024, let's review your taxes when they're complete, or in some scenarios, let's review your audit when that's complete. It just depends on the client and the level of financing that we're looking at. Level just means the amount or the complexity of the deal. But realistically, I'm looking for a client to give me at least some baseline financial information to then say, okay, this makes sense, right? I'll tell them, hey, how much cash do you have to invest in the property? I'll ask them that question. It's a real direct question, lays it out. If they say they've got no money, that changes the conversation.
Absolutely.
Right? But if they say, hey, I've set aside this amount, and I can then just back into, hey, well, this is a loan that you probably can support based on what you've given me.
Good, good.
Yeah.
So two things, though. When I come to you, you're getting to know my business,
Yes.
right? And me. And so when I come to you, I'm just introducing myself, Don, how are you?
Yes.
And then you and I talk about the business and me, or will you talk about the business?
We talk about the business and you.
Okay.
So I want to understand really your financials and what your goals are for the business. And so typically what we're going to need are 3 years of tax returns. That's the maximum. We also work with 2 years of tax returns, a personal financial statement that's going to have to be signed, and really that's what we would need to get started.
Now, do you need a business plan, a formal business plan or informal business plan?
It depends on the industry that you're in. If it's more of a complex industry or something that I would need to explain to the underwriters, yes, we would require a business plan.
Okay.
Or if we're going to utilize the SBA, because sometimes after speaking with my client, I'm going to understand that we're not going to get the loan approved without the backing or the guarantee from
guarantee.
the SBA.
Okay.
So we do have an SBA lender that works for Fulton Bank, and very experienced, and we would require definitely a bio, and we would require that,
Okay.
a business plan for an SBA loan.
So Chris, same question. When I come to
Yeah.
you, I know we're talking about property, but do I need a business plan or give you some idea of what the property's going to turn in terms of revenue and
Yeah.
things like that?
I think it depends on where you are in your life cycle. If
Okay.
you're an early firm, and I say early meaning probably in your first 5 years, it'd be helpful to have a general synopsis as to as to who the business is, what the business is, what they do, et cetera. The earlier the business, then sure, it's very helpful. If the business is established and been around for a number of years, I don't need a business plan. You know, I can get a feel for your industry based on what you've told me. Sometimes your website is very helpful, et cetera, et cetera. But it just really depends. So we're willing to look at startups, which most banks are not. But mind you, I do have the SBA programs that do require a description, a synopsis of your business, right? And then I also want to get a feel for how well you're planning, how well are you sticking to kind of what your goals are for the business. And sometimes it's helpful to have that in writing.
Okay. And that all falls back into what the Wealth Zone University always tells you. Planning is vital. Understanding your planning is vital. And then strategic forecasting, because both of these bankers and non-bankers are going to need to know about your intentions and your cash flow. And so on your side, there is a debt service, which
Yes.
I'm not going to mess up.
Yes.
But tell us about that.
Our debt service coverage ratio.
Okay, say it again one time.
Debt service coverage ratio.
Did you get that? Okay.
So we're right at a 1.2. So that means that after you've paid 100% of your bills, we want you to have 20% left over as a cushion.
As a cushion.
For an emergency or whatever.
Okay.
So debt service coverage ratio is very important. We want it to be at a 1.20%.
Okay. And Chris, do you have a debt service
Yeah,
ratio
yeah.
kind of situation in commercial lending?
I think this is one of the biggest differences between a non-bank and a bank. So for us, sometimes depending on our programs, we can go as low as 1-to-1 or 1.15. And what that simply means is that you can cover the debt, the existing and future debt, 1.15 times, or in this case, 1.2 times. So if your debt is $100,000, give a real simple example, we expect you to have net profit of at least $120,000.
Okay.
Simple math, right? And so the reason why the financials are important is that we're looking at historically what the business has provided when it comes to net income, and we were usually, especially at the bank's level, looking at a 3-year trend, 3 years in the rearview mirror. At the non-bank level, I can lend on projected income.
Okay.
So even if the numbers are insufficient
'Cause you're
historically,
on commercial real estate.
certainly,
Okay.
I can look at what you've done in the most recent year, what you've done on an interim basis. Let's say we're talking in June. I can look at your June and July numbers and get a feel for how this year is going. And then I may ask the client, hey, can you project out the rest of the year and then the year beyond that? And I can use that information. So basically, I'm willing to look forward. Typically, most banks are not, and that's one of the biggest differences between bank and non-bank.
Okay.
A little more flexibility.
All right.
The criteria is the same, right? But I'm willing to give a client credit for their run rate. What's in front of you?
Okay.
Right.
But that's because you have a building that is collateral for
Certainly.
addition cash.
Certainly. So we do look at the historical debt. So I will say the business debt schedule. What do you have today that you're managing, and then you're adding a property, capital expenditure to that. So I've got to look at what you've done historically. So let's say you have 4 truck loans. I've got to look at the monthly payments on those, as well as the future payments on the piece of real estate that we're looking to finance.
So Tiana, when you look at the business's financials, are you just looking at the net profit on the P&L, or are you also looking at the cash on the balance sheet?
We're looking at both
Okay.
because we really want to take a holistic approach at providing the capital to the client. So we
Okay.
really want to look at both. So we really want the client to understand their balance sheet. We want them to understand their personal debt. We want them to understand their business debt and all of the expenses associated with the loan.
Okay. Controlling and owning your financials is what we're talking about. Chris, same question.
Yeah.
When you're looking at it, I know the commercial real estate's involved.
Yeah.
But are you looking at the P&L profit and the cash flow and the commercial debt? What are you looking at when you do your financial analysis?
Yeah, I think that's the one thing that's consistent, whether you're with a bank or non-bank. The reality is that we're looking at both balance sheet and P&L. There are some companies where you only have a schedule, right, where you may not have a balance sheet, But realistically, yeah, I want to get a feel for your current leverage. I want to get a feel for your liquidity. So yes, I'm looking at your cash, but also to how profitable your business is. And then are there any items that I can assess with regard to overall cash flow that will help me get you to a yes? And the reality is that we're looking at you borrowing sometimes a sizable amount of money.
Especially for commercial real estate.
Certainly. And so I have to really look at everything. So on top of the balance sheet and P&L, the individual's personal financial statement is a big part of it as well, right? We like to lend to legacy companies, not lifestyle companies.
Okay, explain those two differences.
Well, a lifestyle company is, and we've seen it over the years, companies that are focused on today,
okay.
right? A legacy company is a company, in my opinion, that you can look at the balance sheet and see that the management is focused on tomorrow,
Okay.
right? And what that means is that instead of taking all the profit out of the company, they're reinvesting back in the business.
Okay.
A lifestyle company is just that.
Just that,
You're right.
okay.
Nice toys.
And that brings us to two things that Wealth Zone University always tells you. Number one, it's cash flow. You gotta have positive cash flow. Hopefully that net profit on your financial statement is reflected in your bank account. And number two, what Chris says, legacy. We believe that being in business is a right way to build wealth, but you can't build it without cash flow. You can't build it without banking relationships. And you can't build it unless you have a good plan and put it in place, and it starts with these relationships, okay? Hey, I want to thank the two of you for hanging out with us today. We're going to try and get another session in sometime soon. And then, folks, these two folks, you need to know them, so make sure that we start those relationships early and have the documentation that's needed to get it done, right?
Certainly.
Cool. Thank you two for hanging with us today, and we'll do this again real soon.
Thank
Cool?
you.
Thank you.
As for you, remember that it's really important that you start a relationship with a banker before you need the money. Have the documentation that they're going to need before you walk in the door. And if your accountant isn't making sure that you understand your financials, then you need to think about changing accountants. See you in the next session of Wealth Zone University, where we'll share more and more vital, proven business practices with you. Take care.